Hey there. Just thought I'd take a walk here because I've been cooped up in the house, cold, the past couple days. So gotta get some sunshine, such as it is behind clouds and whatnot. Get some blood moving, all that kind of stuff. But been taking a look at the markets past little while. So markets are down right now 500 to 600 points. I mean, on the Dow, 2% roughly. On the Dow, the NASDAQ, and the S&P. And over the past couple days, it's been down, a lot. A noticeable chunk. Such that you're seeing articles, I saw one today, that said, why is the market down? Take your pick, as far as all these different things. So, the Peloton IPO, not very exciting, dropped a bit. WeWork IPO, which I've talked about before, has been officially pulled, and now the bondholders are panicking because it's like, well, how are these guys going to pay their bonds? We'll see. People are criticizing SoftBank, which was the major investor on prior rounds for WeWork. So, they're getting close scrutiny. On and off with China. And, I said in the past that, maybe 2 weeks ago or something, that I think people in the future are going to look back and they're going to say the WeWork IPO is that point that we're going to look at. I said this marked the change. And so that is the, I'm sticking with that. And, I saw an article just yesterday about a bunch of Silicon Valley venture capital guys getting together with like 100 different startups and advising them to say, hey, cut it with the IPOs, go direct listing instead, which is interesting. Because, in a direct listing, it's just, the stock shows up one day. It's not like a big sales event. If you are one of those people who is waiting on that stock, then yeah, it would be a time to buy. But it's not the same kind of fundraising event that an IPO is. And a buddy of mine is going direct listing on the NASDAQ next year. That's the plans anyway. Running some portfolio of businesses, kind of a vertical, not really a vertical roll up, more like a horizontal roll up, which I guess would be roll in instead of roll up. But yeah, so that looks like it's going to be the trend, and that's assuming though that there's still an appetite in 2020 for those kinds of things, whether it's my friend's company or these other startups that want to go public in the future. Because if we go into a market crash here, and I don't know, for those of you guys who are younger, in the crypto space, who didn't really experience the prior crash in 07, 08, 09, it's, when the tide turns, or on a global scale, and investor appetite vanishes, then it doesn't matter what you're selling. I mean, people still buy food, but as far as the luxury goods and things that are not deemed essentials, volume goes way down because people are hunkering down as much as possible, depending on their circumstances. Similarly, real estate prices in Miami, which is about an hour that way, and real estate prices in Manhattan are weakening on the third quarter. What's interesting about the Manhattan numbers is that the luxury market has been weak for a while now, but this latest report saying Q3 prices are down like 8% year over year, that's the entire market, not just the luxury market. So that is a a bad sign for them anyway. And so we got two major real estate markets: Manhattan, which is the leader within the New York City metropolitan, and Miami, which is the leader within the Miami, Fort Lauderdale, South Florida metropolitan. Both those markets are rolling over, and we saw that Seattle went negative. I think it was last month or the month before. So, you know, if you look at the Case-Shiller, there's the Case-Shiller 10, the Case-Shiller 20. They're tracking 10 and 20 cities or metros, respectively. That's 3 of them that are going negative. So that doesn't look good. So, you know, it's October, I think today's the 1st. The 1st or the 2nd, I don't know. And typically not a good market, not a good month for the markets, October. You know, Black Monday and Black Friday, and all those kinds of things. Or is it Black Tuesday? I don't know. You have to forgive me, I'm still a bit under the weather. Hopefully the wind's not messing up the audio too much here. But yeah, so historically not a great time. And you know, whether the crash starts in earnest in October or not is, you know, sort of just semantics. You know, we are in the initial stages, I think, right now. And you know, that's the Fed is going to have their response. You know, they've already started cutting rates. The latest drop in market prices, you know, the chatter is all that the Fed needs to do more to cut. But, you know, and the Fed has a lot of power, you know, with their control of the price of money. You know, they control the short end of the interest rates. But, you know, the collective or aggregate will of the markets will always win in the end. It could take a while. I mean, we've been, what, 10, 11 years taking a while, and people have been calling for the crash since year, low battery, since year, I don't know, 4. But I think we're finally getting ready to see it. And whether it's, like I said, whether it starts in October in earnest, or whether it starts, you know, later on, first quarter 2020 or second quarter 2019, whatever it is, I think that it'll be soon in a, you know, in a historical sense, soon. Not tomorrow, but soon. And so the question becomes, well, what do you do? You know, because if we see a big market crash, generally you don't want to buy into that until it's crashed. Then it's a great time to buy. Same thing with real estate. You know, well, real estate's interesting though, because there are different kinds of markets. There are capital appreciation markets, like the California markets, by and large, and, you know, Miami and New York and all that kind of stuff. And then there are cash flow markets like Memphis and Nashville and New Orleans to a degree. Those cash flow markets, I mean, they might go down in price a little bit, but they didn't go up very much either. So, you know, they're a much more stable kind of subsection of the real estate asset class, simply because, you know, it's a cash flow market. It's not a capital market. So your upsides are limited, but your downsides are limited too. But, you know, what else can you do? You know, precious metals is always a thing. Crypto, which, you know, most of my audience is crypto interested. And, you know, it's going to be interesting because, so, over the past couple of weeks, we saw Bitcoin and everything else kind of go from that 10,000 level down to 8,000. And, you know, I think that's just the beginning, because, you know, the traders who are trading on exchanges and not really using crypto, they're just another alternative asset class, they are going to have to liquidate because they're going to get called out on their other positions. So I think in the short term, it's going to be very bad news for crypto. After that's all said and done though, which might take a matter of months, maybe a year, then that sets the stage for the next rally. So I would not be at all surprised to see Bitcoin do a full round trip. And Scaredy Cat Guide was talking about this on his MSP Wave show the other day. You know, there's plenty, if you look at the historical charts, plenty of times Bitcoin's gone up, Bitcoin's gone all the way back down. So I wouldn't be surprised to see that either. So see 3,000 or 3,600 or whatever it is. And then once that's done though, and all those traders are washed out, then the people who want crypto as an uncorrelated asset, or who actually want to use crypto, or who are the trying to just escape their local currencies, like I was talking with somebody about the Argentinian peso the other day. Those buyers will come in, you know, because the cure for low prices is low prices. And so I think we'll see the rise after that. So, you know, I don't think we're there yet, but it's coming. So that's my take. And, you know, we'll see, you know, in a year's time we'll look back and say, huh, I was right, or huh, I was off a bit. I don't think I'll be absolutely wrong. I don't think we're going from our current market levels up another 50%. You know, whether it be real estate or stocks or crypto even. I don't think that's going to happen. So we are toppy. In fact, I think, I'm trying to remember now, I think it was Bank of America just came out with a research paper saying that the top is in. You know, we've already reached it. We're on the downside now. So we'll see if they end up being right, and hopefully I don't get rained on too much here. But yeah, so button up, and you got to keep your powder dry for when those buying opportunities come on the other side. Let's see if I can stop this.